Welcome to Accounting 3110. This is the first module of several modules that we will be using to cover the content of the course. This particular module is going to be very introductory in nature, and I hope that by the end of this module and at the end of this video that you will have a good understanding of what management accounting is and also the role that management accountants play in a business organization. When we talk about management accounting, I think it's helpful to compare and contrast it with the branch of accounting, of financial accounting that you are very familiar with. What would be the same would be the fact that accounting, regardless of whether it's management accounting or whether it's financial accounting, accounting plays a support function, and it plays the role of providing information to users. Now, the big difference between management accounting and financial accounting is that, of course, financial accounting focused on external users, and our subject here is going to focus on internal users, management within the organization, and other decision makers. So this changes a lot about how we approach the reporting that we do. While financial accounting was very rules-based and was obligated to follow GAAP, in management accounting, we put a priority on relevance really over reliability. In other words, timeliness is critically important in the information we provide to management. The information needs to be very relevant. And it's not that it doesn't need to be reliable, because it does. But in financial accounting, reliability was really the emphasis. And here in management accounting, we put the emphasis, or the priority goes to relevance. Also, when we're doing financial accounting, we're always looking back and reporting on what happened. In management accounting, it is very forward-looking, so we're going to be anticipating what might happen. The role that management accounting plays in an organization is very, very important, and you can consider management accountants really to be part of the management team. When management accounting provides information to internal users such as managers and decision makers, this implies that the information is highly confidential. All this information must be kept inside the company and not made available to outsiders. Therefore, it's critically important for management accountants to be highly ethical people. So if we could, if you would pull up your ethics model that you found in this first module. And I want to just go over this with you quickly, but as a management accountant or any type of accountant, it's important that a person can recognize when an ethical dilemma occurs. This means just being sensitive, that you may be sensitive to the fact that you may be in a situation where it may have ethical dimensions. And when you find yourself in an ethical dilemma, you have to first identify the parties that are affected, or the parties that would be interested. From that point, you have to consider different alternatives and evaluate the effect of each of those alternatives on these interested parties. And ultimately, you will have to choose the best alternative from the choices that you have prepared. This ethical model, again, even though we may not go through it specifically, again in the course, is going to be important to remember as we address different issues related to management accounting. Because management accountants know that costs just don't happen on their own, but that something is causing these costs to be incurred, much of the management accounting work is dealing with the following four issues. Number one, management accountants try to better understand what the costs are, and maybe more importantly, what's causing the cost. Secondly, management accountants are always striving to find a better way or a more accurate way to measure the cost. Thirdly, in this branch of accounting, there's a lot of attention given to working with management to minimize costs when possible. And finally, there will be costs that are not discretionary, that are going to be present. And what we want to think about with those types of costs is how we can maximize the benefit from these non-discretionary types of costs. For example, if you are a small businessman and you have just opened a small business, you will probably hire someone to be available in the office to answer the phone so that you don't miss important calls from new potential clients. Now, in a new business, there may not be that many phone calls. And perhaps to maximize the benefit of the cost of this person's salary, you could use the opportunity to cross-train this person so that even though you're kind of stuck with this person's salary, paying this salary every month, you'll be able to maximize the benefits that you get from the incurrence of that cost. When we talk about cost, we also talk about managing cost and what devices are available to help manage cost. A couple that we'll be looking at in this class, for example, would be setting standards or standard cost, and another area would be the preparation of the budget. When companies set standard costs or when they use budgets, they are really implementing what we call the control process. And again, if you would pull up the handout that was included in your Module 1 material, this is called the control process. It's actually a flow chart. And if you could look at that with me. This control process is, again, a very important tool for managers. And what this involves, it involves the work of management accounting as well in helping to set up what we call standards of performance. This could be a budget item or this could be a standard cost. For example, it should take $50 to produce this product. When we say it should take, then we're actually referring to some kind of benchmark or standard. The important thing here is you see the standard being set, and then you see some kind of detector which measures actual performance. It is actually at the next stage where the control is established, and that is the point at which the actual results are compared to the benchmark or the standard. So it doesn't do us much good, for example, to prepare a budget unless we come back later and compare our actual spending with the budget. And when we make that comparison, that is when the control is established. Now, we're going to find that there are deviations or variances, as we call them in accounting. And the important thing here is not just to calculate the deviation or the variance, but a very important element here is to ask why. Why were we over budget, or why were we under the standard cost for making the product? So even though that question why is not depicted on our flow chart, it's something that you certainly may want to add. If there's a deviation, we must ask why. And then we make adjustments as needed. Sometimes we have to change the plan, and sometimes we have to change or correct our performance. But this control device, again, will show itself throughout the course as we look at predicting what should happen and then later comparing to that what actually did happen. To conclude this first module, I'd like to finish by discussing some of the characteristics of a management accountant. A management accountant years ago would have been called a cost accountant, and now we hear such terms as cost analyst, cost consultants. But the term cost accountant is really very infrequently used these days because the wideness or the broadness of the work of a management accountant really makes it inappropriate to just call them a cost accountant. Let me go through some of these characteristics of management accounting, and I hope that many of you will find this branch of accounting to be interesting, and some of you will actually find that it's very compatible with the way you think and your interest. Characteristics of a management accountant or a cost analyst, if we want to use that term. These persons are highly ethical. They are good critical thinkers. They are problem solvers. They must be good communicators because they spend a lot of time explaining things to managers and decision makers. And finally, they must have a very broad understanding of general business concepts, accounting concepts, and also will need to have a very good understanding of the industry in which they work, and specifically a good understanding of the particular company in which they work. As we take a preview of the upcoming module 2, I just want to go ahead and tell you that in that particular module, we're going to be discussing a lot of the terminology that is common to the branch of management accounting.